Hi, welcome everybody to this episode of Meet the Pioneer. It's a behind the scene look at how technologies like artificial intelligence and robotic process automation are helping small accounting practices punch above their weight. Kanaya Eruchalo, and with me today is our guest for the month, Paul Light. Paul's the founder and chairman of the Next Level Business, a growth accounting firm that's on a mission to help unlock the hidden potential in exciting and innovative businesses run by entrepreneurs. Hi, Paul. You're
Hello.
welcome to this episode of Meet the Pioneers.
Great to be on and talking all things AI, RPA, and tech and finance.
And finance, absolutely, business in general. Just to get us started, Paul, do you want to tell us a little bit about yourself, your practice, your journey so far, where you see your business in the next 5 years, the whole 9 years?
I'll maybe keep it to 3 yards and try not to bore too many people. But so my background, as kind of you're aware, is big businesses, PLCs. That's where I kind of grew up in finance roles, FD, commercial director roles, and eventually kind of general management roles in there. And kind of retired from PLCs a few years ago and got involved with a whole bunch of people in my network who are scaling up businesses and wanted a bit of help with that. Ultimately, what that kind of showed me is that the world of small business finance and big business finance are very different worlds. When I was in very large companies, we would invest in robotic process automation, a decade or more ago, because we would invest unbelievable quantities of money, hundreds of thousands of pounds in RPA to deal with very high volume transactions and processes, for example, and that might replace 4 people in the finance team, which we could then redeploy those 4 people into other areas of the business, freeing them up. But that doesn't really work at kind of small business level. So what Next Level Business is essentially, we run finance departments for ambitious, high growth or high potential startups and scale ups. We bring all of the kind of big business expertise, all the big business principles, all the tech, the people and the processes all together and kind of run that finance department for them. And like most accountancy firms, we also do we do all the normal things an accountancy firm would do, so the statutory accounts and tax returns. But our kind of bread and butter is running the finance departments and teams with CFO services and CFOs on top if they want it. So that's our kind of I guess our offering in the marketplace, and we're 6 years old at the moment. We won Best Small Practice of the Year after 3 years running, so the Accounting Excellence Best Small Practice of the Year. We're now a kind of medium-sized firm by definition, so we've been growing fast ourselves, and we've pretty much doubled in size in kind of the last year. As people have kind of woken up post-COVID and realised actually they really could do with more financial support, not just in pandemic times, but in this kind of post-pandemic uncertain world that we're in at the moment. So I think kind of what we're offering, which is running finance, not backward-looking accounting, but running day-to-day current finance for people, and if they want using a CFO to help them plan and look forward, those activities are in high demand at the moment, and people are really keen to get that value add in their business if they've not had it before.
Wow, that's really interesting. So you can be described as your typical accounting practice from the look of things. Sounds like you're more of almost like a CFO as a service in addition to being an accounting firm.
Yeah. I would describe ourselves as finance as a service, if that's what
Finance as a service.
So FAS, finance as a service, and I think it's really important to understand the difference between or how I define finance versus accounting. Accounting is rear view mirror looking. It's about what has happened in the past, and certainly from a kind of normal accountancy business, that's up to 9 months ago or longer. When you're writing up the historic sets of accounts. Finance is all about running the day to day, so that's what's happening right now. In my world, in the business. So, who's paying us? Who do we need to pay? How is money coming in? Is it not? Are we making money? Are we not making money today? And finance also has a forward-looking view, which also is about planning, anticipating future events and trends and growth and all the other good stuff that typically a more senior finance leader would be involved in, like a CFO. So, I kind of say finance is different to accounting. Accounting is writing up historically what's happened, and finance is about managing today and looking at tomorrow, in my book. So a subtle change. Maybe not everyone will agree with my definition there, but I think, what businesses that I've talked to are interested in is they expect their accountant to do finance, and most accountancy firms don't.
Yes, and I find that to be true from experience as well, being a small business owner myself. But it's like you said, there's that relationship almost between finance and accounting. So there's that conflict or tension, but the two of them coming together creates a wholeness, because you do need that historical perspective, but at the same time you want to be forward-looking in your approach.
Yeah, and you have to be on top of what's happening today. If you want to be in finance, it's about what's happening today, not what happened even last week or last month. It's what's happening today, and how are you helping the business to manage the here and now, essentially. With that, and that means you have to be live in your information and data. You have to be very communicative with your the business. You have to have a much deeper understanding of the client, the business that you're working with. Essentially, they need to think that, to all intents and purposes, you're an extension of their team, and you're not another business providing a service to them. They have to be, thinking about, it's Paul, he's my CFO, and Paul is no different to if I'd hired Paul, from an internal kind of perspective. Yes, we're providing a kind of a service, but it needs to be as seamless as that, really, when you're touching the business. And I think that means, from a technology perspective, that when you're in finance versus accounting, speed, accuracy, the ability to do repetitive tasks every day to make sure that you're up to date. You can't afford to be a month behind when you need to pay the bills. That doesn't work. You have to be current. So, the tech demand and the kind of people demand of being live in finance is much higher than even in accounting. And it's desirable in accounting, but it's kind of essential in finance, I think.
Also, yeah, absolutely. Because my next question really was going to be, from your perspective, what do you see as the role of AI, artificial intelligence, and such technologies in the future of finance and accounting, from your perspective?
Yeah, I think a lot of people see it as a bit of a threat. The kind of AI and all these sorts of tasks that are going to take over an accountant's role. And I would probably say that for the most part, I think that's kind of slightly misplaced or misguided in terms of understanding what those technologies can do. So, I'm very clear that, in finance, it is all about the people, right? It's a people-driven business. You'll never get away from that. But if it's people powered by tech, and underpinned by tech, and they are more productive and they are more efficient and they deliver a better service, and all of those things that might be benefits of them being kind of powered by tech, and more productive from a firm's perspective and an individual perspective, then that just means that you can do more with less. And if you can do more with less, then perhaps each individual can be paid more,
Exactly.
because they're able to be underpinned by some technology, because the cost of the technology shouldn't outweigh the cost of the person. It should be, cheaper than essentially throwing bodies at it. You can argue about the offshoring model and other ways of kind of resourcing, and they have their place, but ultimately, the benefits of productivity and efficiency are to the individual, and it's kind of, what does that mean the individual can then do? So I think if you look at like everybody in a kind of traditional finance stack with a CFO up here and maybe a bookkeeper, at the early stages of their career, almost everybody can benefit from some level of technological support, whether it's AI or RPA or any of these things. That means that they can kind of step up a level in that stack sooner than later. It's like the bookkeeper can actually think about the transactions, and maybe rather than reconciling them, the bookkeeper can start to think about maybe some basic tax advice that they might be able to give to the particular business owner. And then if you're an accountant and you've had some other benefit, maybe you're talking more to the client. It opens up the opportunity to have more conversations with the business, learn more about the business, what's going on, manage today instead of struggling to deal with yesterday, so to speak. And that provides a better service, and a more engaged accountant and a more engaged business owner. So I think everybody can benefit in one way or another up the up the stack. And when like me, your kind of role is to to CFO a business, I can exclusively look forward. I don't have to sort of worry so much about today or yesterday. I know that's being done, and we've set ourselves up well. So it frees me to kind of make sure I can add the value that, quite frankly, you're supposed to when you're the chief financial officer, and you're supposed to be adding strategic value to the business. If you're not, then what's the point of of having someone at that level to to do? So if it frees me up to add a bit more value and everybody else has benefits, then I think that's one of the huge gains, and you need to look at it through that lens as opposed to the other end of the telescope, whereby the robots have taken over the world, so to speak. I think we're a long way off that, but I've been playing with chat GPT just as much as everybody else, and thinking about how does that make me more productive, what can I do with that, could it help me in some way to be a better CFO? I don't know. I'm in the early stages of trying to find out there, but if it does, then why not adopt it as a kind of principle? Along with many other aspects of technology.
Absolutely, exactly. I was going to say, ChatGPT has been interesting as well. Like you said, I've been playing with it as well myself. And the interesting thing about it is, you find from other people's experiences, is how it can complement you. And that's just as an example. If you're researching if you're working on anything from a finance perspective, you can ask it a question and then go away. It gives you provides answers immediately that support whatever it is that you're researching a particular industry on behalf of the client. It provides some of the information that you need, insight that you need to be able to, give better advice or come to a particular conclusion about things. So rather than spend hours doing your personal research, you almost have like a personal assistant that does some of that legwork. And it's the same in our PA as well, because if you, like you said earlier, if you had technology helping you to do some of the grunt work, frees you up to do some more value-added work for clients.
Yeah, absolutely. And one of the kind of chat GPT things that I kind of found really helpful was nothing to do with finance, actually. But obviously when you're in a role where you're dealing with multiple different businesses, one of the challenges I have is I personally want to get to know every business that I'm CFO for, the industry, what's difficult, what's the challenges in that industry or in that business, what are the kind of strengths of that industry and business, and some of the businesses that I look after or will look after in future. I just asked Chat GPT to say, okay, give an example, like medical device business, which we took on fairly recently. I asked ChatGPT to look at, just say, tell me what the challenges are in the medical device space specific to this, these type of devices and things. And it saved me hours of clicking around on Google and served up, a good summary of the kind of challenges in that space. And obviously then I asked a few other follow-on questions. And because it references everything that was on the internet pre-2021, there's an enormous basket of knowledge that it's got access to. So even just doing the research, it was like having a kind of PA that you could send off. And traditionally, if I was doing something like that in industry, I might send my PA to say, go and do me a couple of pages on this as a research thing and give it to me. Yeah, she'd spend days, pulling that together. And you can get it in 5 minutes, right? So I can walk into my first meeting with a medical devices company, not knowing anything about medical devices, but have at least an appreciation, if not an understanding, of the challenges in that sector, and then to think about how we might rise to those challenges from a financial perspective. So that saved me hours, and that's an entirely kind of client service orientated use of it. I think the use cases are important to stories to pass on. Whatever tech you're talking about, these kind of use cases are important to kind of talk about, because I think it's difficult to make the connection between technology, opportunity, and doing. And sometimes the technology's been there for a while, but nobody's really thought about the opportunity or done it. I think when you see it all connected, you suddenly go, aha, it's that penny drop moment where you go, well, actually, yeah, I can see that. I can completely see that.
Yeah, absolutely. So clearly you're a huge advocate of technology, within your practice. How much automation would you say you've implemented within NLB? How automated would you say it is?
I think that's a very difficult question to answer, not least because what is the definition of automation and how do you measure that? I think that's a pretty tricky question to answer. So if I break that down to particular tasks and things, we don't use, in terms of CFOing, as it were, conversations between clients about planning for the future, zero automation. It's about it's about your experience. It's about the contacts. It's about the conversation. So other than the automation of booking meetings to arrange the conversations and things like that, which obviously help, in terms of actually doing the work, very little kind of automation in that sense. Coming down a few levels where you're talking about like insight production. So this is like, how much money have we got in the bank today? What bills do we need to pay tomorrow? Those sorts of kind of pieces of information. Then those examples, along with others like maybe bookkeeping and payroll, whenever I've really looked at those areas and thought, what is possible? Our default at the moment is every area that we've looked at, we reckon 50% is achievable. 50% automation in an area is broadly achievable. And if that's our kind of like, not a gold standard, but that's our kind of like, if we've really understood the technology, if we've really understood the opportunity, and if we've really implemented it well, 50% seems to be doable. It's a really weird number, I know, and it doesn't, people will be like, oh, 50%, he's just making it up. But we've had that number across a number of different streams, and we always hit 50 or thereabouts. So I've adopted a generalization, which is 50% of everything can be automated. We just need to work out how. For something like managing data, which in an accounting firm, you've got a lot of numbers and transactions and stuff. We are delivering probably just over 50% automation on that data at the moment. And that's huge. That's huge when you've got, e-commerce companies generating thousands and thousands of bits of data every month. And you've got maybe tens or hundreds of businesses like that, in an accounting practice. So, that is a huge down payment on dealing with data, and really all a finance and accounting firm is, in my view, is, it's all about data. It's financial data, yes, but, you use that data in different ways, right? You can use the data to prepare a set of accounts. You can use the data to understand how your costs are increasing. You can use the data to help you sell more or understand your profits and your margins or whatever. You can use the data in many different ways. But ultimately, it is all about data, and HMRC require the data in a certain way, and the management want the data in a certain way, and various other stakeholders, want it as well. So if you can be efficient at managing data and help automate some of that, then, I think it's possible for most firms to get to kind of a 50% level. We've seen huge variation depending on client and depending on business and depending on the nature of them. So I would generalize at kind of this 50% level, but actually, what we've seen is business to business, it could be as low as teens and as high as 80 to 90. It just depends on the nature of the business, the nature of the data, the repetition, all the other things that go into the kind of melting pot. But a big range, but on average, kind of 50 seems to be the a number that is achievable in the real world. We are achieving it, so kind of that's probably your answer. I suspect for everybody that number will vary a little bit. Depends on what you're doing and for whom. But for us, half of everything can be managed extremely efficiently if you really go for it, so to speak.
And is it interesting you say that, because I know everything starts with my experience in life is everything starts with a target, right? So if you set yourself a target, all that starts happening is you start looking for the opportunities, those opportunities, like you said, the question is where. And again, it might be that in some areas of the business, by virtue of what you need to do in that space, doesn't need that level of automation, but definitely as you go further down, look at more of the manual repetitive tasks within the business. Therein lie the opportunities. And again, by clawing back some of that time, 50% of your people's time, 50% efficiency creates more capacity, doesn't it?
Yeah, and certainly in the accounting and finance space, everybody's talking about how difficult it is to recruit at the moment. And take that with a pinch of salt, because I think people are recruiting badly, but that's an entirely separate webinar and conversation. But if everybody's finding it difficult to hire the right people and the right talent, then it's a scarce resource by definition. So when you've got a scarce resource, what you really want is an abundant resource, and technology is abundant. And therefore, if you can supplement a scarce resource for an abundant resource, then you're going to be strategically better placed than somebody who's always looking for scarce resource, both in terms of growth, just replacing that person who's left, or those two people that have left, or whatever it might be. technology gives you, many advantages, when you're in a kind of practice that, or business space that typically is people driven, but also the better candidates, the better people want to work more efficiently and with technology. So it's not just necessarily getting through the work, but it's also attracting the people who want to be forward thinking and using these things. So, there's a huge difference. If you ask everybody in the accounting space, in the traditional accounting space, would they rather do it on paper the old way, or would you rather use the latest kind of technology? I'd be surprised if you didn't get like 95+% of people saying I'd rather do this way than this way. And I actively wouldn't take a role that pushed me back into, a slightly older school way of doing things. Not that there was anything necessarily wrong with that, but the world has moved on and people want to move on with it, and therefore, when they're looking for, where do I apply my skills in future, they're going to want to look for, I guess, a firm that kind of resonates with them in terms of the way they want to work and the way that what they want to adopt and things. So many benefits there, I guess.
Absolutely. So coming back home a little bit more, the robotic bookkeeping, right, means a lot of different things to different people. How would you describe robotic bookkeeping to a fellow accountant or a bookkeeper or a CFO at a dinner party or somewhere?
I think if I was to describe it, I would be, if I was describing it to someone else in the kind of accounting and finance space, then I would describe it as, robotic bookkeeping is about dealing with the low-hanging fruit, right? It's about dealing with the obvious. So if you can deal with the obvious in a well-structured, rules-based way, then it leaves time and effort to focus on the less obvious transactions that require some level of human thought or context in which a robot does not have. So, in that sense, I'd say, what if a robot came in and cleared the wood, helped you see the wood through the trees every day? Would that help? So that only what was left was what you needed to focus on, and there wasn't a fog in between, you and seeing what really needs your undivided attention. And I think the kind of robot bookkeeping clears the fog and allows you to see the wood through the trees, so what's left to be able to deal with that requires client knowledge, business knowledge, context of what's going on, and that then allows you to kind of focus on that. And obviously, as a result of that saves an awful lot of time, but it also makes things more accurate because, a robot does not get tired. A robot cannot not follow the rules that it's been set. So if everything is set up correctly, you have and you've got a largest volume of stuff being dealt with by technology, a robot, whatever, in RPA, then you have a large amount of transactions that are right every time, and there's no change in where they go, what tax rates applied, and all the other things that an accountant worries about. So you've got an increase in accuracy, an increase in speed, and you're diverting the attention of the professional person to really what's left, which is what they need to concentrate on. So speed, accuracy, and attention kind of all combined is sort of the benefits that we've seen from getting into this space, which, from a client perspective, what that means is, they get more accurate stuff more often, quite frankly. They see a better service level. We're able to deal with more. and potentially we're able to deal with more transactions, so it's very different. You get a business that's very transaction heavy, and it's actually quite difficult. It can be quite difficult for an accountant to deal with that. You've got thousands and thousands and thousands of transactions. It's difficult just because of the volume. Nothing to do with the trickiness of each transaction, but the volume makes it a little bit more difficult to deal with. So when we're doing some high volume activity, we have a few clients with VAT returns that are between 50 and 100,000 lines.
Wow.
So you think about, 50 to 100,000 lines on a VAT return, and 4 times a year I've got to check every single one. Lines. And our standard is you look at everything. We don't just assume it's right. You've got to review it, right? It's going to take you a reasonable amount of time to get through 50 to 100,000 lines, realistically. Doesn't matter what you do.
Yeah.
But if you know half of those have been put there by technology and automation, you've immediately maybe chopped 25 to 50,000 lines out of your review workload, because you need to check the rules, but you don't need to check the output or the application necessarily. So, if someone says to you, I've got 50,000 lines in Excel I need you to check, and if someone said, I'll do half and you do half, you'd be like, happy days.
No brainer.
Yeah, no brainer. I'll take you up on that offer. Thanks very much. That that's a byproduct of using technology, which is you don't need to second guess the data quality, because you have written the rules and the application has been done, and the outcome has been tested. So when it's run, it's going to be right. And even the best person on an off day with those rules can still get it wrong. Won't be 100% accurate and efficient. Getting it wrong, getting it right. So that's what you get from kind of, I guess, RPA, which is making sure that you've got this large chunk of down payment on things. You don't have to shy away from high volume activities or businesses, so you don't need to turn that business down. So an accountancy firm might not want to take that on, or you take it on and there's a huge resource issue with dealing with it, so to speak. So it gives you commercial opportunities that you might not have had before, and it just means that you can deal with some of the bigger stuff in a much more efficient and timely fashion. And it's always been the case with RPA, because when I was in big PLCs, we'd look at one process, and the volume of that process would be very, very large, right? And RPA started with, its bullseye really being, I guess, extremely high volume processes, which would take humans a long time to do, highly repetitious, very boring, all the things that we kind of know. And, I think I can remember at some of the PLCs, we invested like 6 figures in RPA, process automation, for particular processes. So, it would often cost between 50 to 300-400 grand, per process, depending on what it is that we were doing. And we'd look at the ROI of each process and the resource we had to put into it, and go, okay, that's how many year payback or whatever it might have been for that process. And we would then, build it and, deploy it and try to maintain it. And you can't do that level of investment for a small business. It doesn't, that's crazy to even think it. So there was no natural trickle down from big businesses. So I think what accountancy firms and, people who are dealing with multiple businesses have the opportunity of is, rather than looking at one high volume process, is looking at processes that go across a number of different businesses and kind of sharing the investment across, 100, 200, 300 businesses, whatever it might be, so that actually you don't need to be 100 million turnover to think about doing RPA. Actually, that allows you to democratize it down to potentially even the smallest of businesses. And I think that's a really exciting kind of opportunity that accountancy firms typically, or bookkeeping firms, will have an advantage, because the businesses themselves couldn't do it, because it's too expensive an activity for a single business to do. But when you're looking at multiple businesses, well, that's a game changer. So that's an inbuilt strategic advantage, strength for a firm of bookkeepers or accountants to be able to do. So I think that's a really interesting space, for these firms to look at, and that's really how we've managed to kind of justify it, which is we couldn't justify it for one business, but if we take a broad view about all of the businesses and what we can do, yes, it might mean we can do every process for every business. That might not make sense, but where there's commonality, you can make it work across the spectrum. So, the democratization of these things is partly what you guys are doing, and what we've tried to do, which is bring it down from the big businesses and make it work in kind of the smaller businesses. And you have to tweak your approach, of course.
The model, of course.
But if you're if you're open-minded and you can identify the opportunities and put it into action across a number of businesses, then it can work just as well as it does in bigger businesses, in my view.
Absolutely. So I think that's one of the reasons why we came up with the model as well, is exactly the same thing that you said, Paul, is if you look at X number of businesses that have commonalities and you design, the product to fit how they work, and then perhaps you can achieve those economies of scale that we talked about and scope that we talked about earlier. And it's the same thing for practices. So what we found that is worked very well is where they've had the open mind approach to run and look for the most complex of tasks to assign to, which they meet once in a while. Look for those tasks that are common across a broad spectrum of clients, and then find a solution, build a bot to attend to those tasks, freeing you up to now focus on the bit more complicated tasks as well. So absolutely. So I mean, the prediction is that staffing is going to be one of the top challenges facing the accounting industry in 2023. I mean, do you agree with that? And more importantly, do you think that there is a way robotic bookkeeping can help? I think you might have answered that in passing, but how do you think is really going to help them to overcome some of those challenges?
Yeah, and I think to kind of round off that question, I think, is there recruiting challenges? Yes, I would probably frame it more as there's a resourcing challenge more than a recruitment challenge necessarily.
Resourcing challenge.
Yeah, because there are more demands placed on businesses and more demands placed on their accountants, bookkeepers, financial people now than there has ever been in the past. Some of these challenges, quote unquote, are dreamed up by HMRC for the better or for the worse. But there's legislative changes. There's issues right across the piece, in good times and in bad times. As we're kind of in at the moment, there's more going on, and the world is getting a more complicated place. So you can no longer firewall yourself from these challenges. If you're working in practice, you have to rise to meet the challenges. You don't have really an option just to have the traditional approach, which is, I'm not going to deal with them, just keep sending me your paper bank statements. That's not going to work in the kind of in the new age. So you either rise to meet the challenges, or you have to decide kind of what you're trying to do. I think so. I think it's a more of a resourcing piece, because there's more demands on financial and accounting professionals than there's ever been. So you need to spend time on those things, and therefore what you were maybe doing yesterday or last year or last decade, it's incremental to that. So if you can, find something like RPA, which helps to alleviate some of the workload in one area, it allows you to rise and meet the challenges in another area, so you don't need additional resource. You need to refocus your existing resource on the kind of challenges that they need to focus on, whilst backing them up in some of the areas that traditionally might have taken some of that resource time. So you've got to alleviate in one area to be able to gain and grow in another area. And RPA, I think you're exactly right. Don't do the complicated stuff first. In fact, do the easy stuff first. So, do the stuff that a trainee might have done, and then get the trainee to do other things. Do the stuff that a bookkeeper may have done and found repetitive and boring, and then get the bookkeeper to step up and meet some of the other challenges. And likewise all the way up the hierarchy that you get in experience levels. It's kind of like, if someone can come to me and say, I'll give you 10% of your week back, and it's there's a technology solution that will help you to get 10% of your week back, I'm all over it. That's music to my ears, because it's 10% more time I'll have to grow our business, help clients grow their business. Or if I don't have any of that to do, 10% more time I'm spending sipping cocktails by the beach.
Exactly.
Whatever floats your boat. But I think what a lot of people say to me, I talk to a lot of, accountants and stuff as part of our recruitment process. And they say, practice is generally this kind of pressure cooker environment. It's like, you've got to do everything. The challenges are coming. You've got to rise to the challenge. You're spread thin. It's more has to be done. And I don't see the release valve. Where's the kind of like, oh, well, do all of this, but you also have to do all of this as well that you were doing before. So, I look at technology as a kind of, it helps you to balance the new challenges with the existing challenges. And, it's fine to, most employees would say, it's fine to reallocate work. I'll stop doing this and start doing this. No problem, but overall, if you're saying you've still got to do this and you've got to do this, then okay, I'll do it for a day, a week, a month. Maybe I'll do it for 6 months. But at some point, I'm going to say, this is not sustainable, right? And that's when you get into the kind of like, people decide to move on. And then you get into a kind of recruitment challenge, because you're trying to recruit somebody to take on a challenge that somebody else has already said isn't possible, isn't workable. And they might last 6 months, a year, 18 months, and then they'll move on. And you have a cycle that you can't break. So I think technology allows you to kind of break the cycle a little bit and try to use it in a way, or at least I try to use it in a way that kind of underpins and counterbalances some of the challenges, so that people might feel refocused, but they're not feeling asked to be doing more, because there are only so many hours in the day. It can't be a situation where forever you can conjure up more hours, or you can't work any faster than you can. At some point there's a limit on that.
Yeah, saturation point.
Indeed.
Saturation point. We're coming up to the end of the to the top of the hour. What, from your experience, Paul, someone that started out on this journey, small bookkeeping practice, or small accounting practice, or accountancy firm, thinking of RP and robotic bookkeeping, and thinking to themselves, where do I start? What will be the best use cases to start from? what will give me that initial ROI or quick win, stuff like that. What would be your advice? Where would you advise them to start? And what are some of the key challenges you think they need to be aware of? So that doesn't trip them up too much.
It's a good question. Answers on a postcard, I guess. My advice would be, every practice owner I speak to, and I speak to a lot, they've built and designed a practice however they've done it. They might have had a plan at the start that was very detailed. They might have just kind of bumbled along and sort of, being a bit of a general practice, so to speak. I think my advice would be, one is make sure you have a focus for the firm. So, who are the clients that you want to serve, right? Now that doesn't mean you can only serve, there's a subject of niching in accountancy, but it's who do you want to attract? What would be your ideal client moving forwards, right? What type of business or individual or sole trader or whatever it might be. What is it that what is it that you want to do? Is there a particular industry, type of client? Is there a type of size of client, that you feel comfortable with? So I'd say even if you're a general practice, you should have a focus of whereby if someone says, I've got 1,000 clients and I want to give you some of them, which ones would you like? What is your answer to that? What's your focus? We would like these clients, look like this, and then once you've got that focus, you've got a kind of, in marketing speak, you've got a persona for who you're trying to serve. And you can also then identify what the technological opportunities with those type of clients might be. So it helps you to have a persona and then have an opportunity matrix with technology with those personas to identify areas to explore of technology. And if RPA is one of those areas to explore, then you should explore kind of RPA. The other thing I would say to a practice is you have to be quite selfish with regard to your tech stack. If you are running a practice and you have a large variety of client chosen accounting software applications, ranging from Sage to QuickBooks to Xero to Free Agent to whatever they might have chosen, then that will make your technology journey more difficult because you have a diverse technology stack. So we are very, very clear that we will only work with our own technology stack. We will only, if there is a function to be done, doesn't matter whether it's like bookkeeping or payments or credit control, whatever it is, we have a technology and a process that we would deploy for that. If they do not want that technology with that process, then they don't work with us, the client, that is. They don't have a choice. So in the same way, I wouldn't insist on the way the tools an electrician would rewire my house with. I wouldn't dream of telling the electrician, oh, you must use this and you must use that and you whatever. They're the professional. I'm paying them to kind of get that job on. The way we view it is we're the professionals. We choose the tools, right? Otherwise, the tail very much wags the dog, and your technology base is all over the place from day one. So one of the reasons we've been very successful with technology is because we've been very singular in our tech stack. We don't have differences, for different activities. It's all common. We might occasionally swap out pieces, but we're doing that for everybody at the same time. So that means our processes are the same. That means our technology base is the same. That means our training is the same. And that also means the application of technologies like RPA is the same across all of our clients, as opposed to needing to be different depending on the base technology stack each client has. So I think focus and your overall kind of cloud technology stack that you've got in your practice are really good starting points for anybody considering like kind of RPA. If you're quite the way down that journey of singular tech stack, and you've got in your mind's eye at the very least a good focus, I'd say you're halfway towards having the ability to then connect in a technology like RPA to help you. But I think if you're not, and you've got your sort of general practice unfocused, and you have a wide technology base, even if you don't desire that, the reality is, if you ask all the people in the room, it's like, have we got any commonality to it? And you don't have more than 50% of your clients on a singular solution, then I think you're not in the right place to be able to deploy RPA. You need to go back a few steps, to do it. It's solvable, but there's other things in your firm you probably need to think about first before you move on. So I think those two things are for the firm owner, so to speak, the tech and the focus. And I think the mindset is for the people in the firm. And arguably that comes down from the kind of partner and owner level. And, either the mindset is right, or the mindset is combative with technology. Like, is it a threat or is it a friend? And I think getting the mindset right that, used in the right way, don't get me wrong, it can rub people up the wrong way if used in a kind of the wrong way. But if you get the kind of mindset and messaging right, people will welcome it and adopt it, and it'll stick. And that's what you want. You don't want friction when you're trying to deploy new technologies. You spend an awful lot of time thinking about it and getting it ready, and then you realize you throw it at the wall and it just doesn't stick and doesn't have the long-term kind of ROI that you envisaged. So getting the mindset right, absolutely key. So focus, tech, and mindset.
I like that. I'm going to take that. Focus, you've had it now. So it's focus, technology, mindset.
Yeah,
in that order, right? I dare say, I think you're exactly right. The mindset even more so than anything else, because the mindset is required for getting that focus. Because a number of times people say, "Oh no, I'd rather serve everybody," and that kind of stuff, or "Oh no, well, whatever technology they come to me with, I'm happy to work with it." It just speaks to that mindset, doesn't it?
Yeah. So, yeah, and that all feeds back into my kind of general view, which is, I think for the smaller practices, they beat themselves up because they're trying to do everything for everybody, and it's much easier to have a focus, right? And if you have a focus, it's much easier to collaborate with people that have a focus that's not your focus. So, we quite regularly will send on work to other firms where we have clients that have, inquire, and it's like I say, this is not our focus. This is not what we do. Whether it's a charity or a partnership or something that's not our focus, I'll say these guys are the best for that. They've got a really clear focus in that area. Go and work for them. I think, it's very difficult to do everything for everybody all of the time. If you have the right mindset, even if you are trying to do everything for everybody all of the time, if you have the right mindset and you can kind of think about that focus area as well as the technology that serves the focus and get the mindset right, you can at least start your journey of, moving in the right direction, even if you've got kind of historical baggage that, that you will deal with over time. And, you can't just change it overnight. I understand that it's, you've got to have money coming in to pay the wages and pay the bills. So you can't just kind of drop everything. But what you can do is set your stall out differently for every day after today. And eventually over time, things will kind of change in the right direction for you. So and at the point that that's really successful, you can make some decisions about, the baggage, as it were, so to speak. So I think I think for the right people in small and medium-sized practices who've got the right mindset, I think this age of technology is really exciting as to what you can do with it and what you can do over and above the traditional kind of accountancy model. I think, if that's something that floats your boat, then technology is a real key enabler of that.
Fantastic. Thanks a lot, Paul. I'm afraid that's all that we've got for today. But it's been, like always, been a pleasure speaking with you. I'm sure we're going to have to get you back at some other point. But thank you so much for being part of it. And thanks for everybody that's joined in. We're going to make this recording available to everybody at some point, either this week, back end of this week, on our LinkedIn page. But I'll wish you all the happy rest of the day. Enjoy the rest of your day, and catch up with you later. Thanks,
Super.
everybody. All right. Bye now.